Hey guys, welcome to the webinar. I'm just setting everything up. I'll get started in just a moment. So welcome to the webinar. Thanks, Peterson. Thanks for your great comments. Thank you. I'll be starting in just a moment. Give everybody a chance to check in. I think I'm still ahead of, still got some time on the clock, I think a couple, 3 minutes till we get started. Rashad, thanks for your comments. I'm just checking out a couple things, seeing how things are closing. Yeah, it was a wild and woolly day. So I think we have a minute to go till the close. I'm just watching these QQQs closing very strong today. We had a Fed chairman speak today. He couldn't have been more bullish on the markets or bullish for the markets. We'll kind of break it all down. So John says, I missed the last two, but got here for this one. So welcome, John. I'll start in just a moment. I think we're just about closing now. So welcome to day 3 of my 4-day live trade execution trading sessions. We've been going into the market every day. Let's see, the market is still not closed. I think we've got a few minutes to go. Got about a minute to go. And then I'll kick it off also. All right, I think we can kick it off. So welcome everybody. Welcome to day 3 of my 4-day live trade execution training sessions. Each day I'm trying to give you an insight on how I break down trades, how I set up risk reward opportunities in the markets based on, projecting long-term moves in the market. So my whole objective is to take a piece out of the middle, out of big moves. Recently when the NASDAQ declined from 334 on the QQQs to 297, I bought some puts on that move and made a whole bunch of dough. And since then we've been kind of backing and filling. Let me just put the NASDAQ chart up here. It's so I've seen a couple of price patterns here. And, to me, it's sometimes you have to choose which is the governing price pattern, that is governing or dictating the next move in the market. And for the last, just the short term, so I was in this trade. I guess I had this up here. I was short Zoom. I'm still short Zoom. You can see I sold short at 347. It was at 327 today. It's about 337. So instead of having $40,000 profit, I've got $20,000 profit there. I was going to put that chart up, but we'll look at Zoom in just a moment. But to my mind, I try and discern what is the pattern or the trend that is the direction that we need to get faced in the stock, in any asset class. So I've been looking a lot at the NASDAQ because, to my mind, the NASDAQ was tracing out this bearish looking ascending, broadening price pattern. And it's ascending because it's ascending throughout the pattern. It starts out narrow and then it widens out at the top. Now, I showed you a pound Australian trade that did the same thing. And then once it broke it, I could make an assessment as to where it was going to go. And I thought it was going to go there. So, we're really in I said this is kind of a zone of opportunity at the beginning of the week, where we're just hovering under this breakout area. And so if we go here and then fail, it's going to go down there. On the other hand, and it's more, looking like it's going to go once it starts coming back in here, then it's likely to continue. And then I would look for some kind of double top up here. So I'm always looking for some kind of pattern that gives me, an indication of what is, the next move, how I should be faced, in, a particular thing. So, at this juncture, when I was looking at this key reversal, I was also looking at a head and shoulders price pattern. And so this is what it looked like at the time, but you can see that when we see these patterns, if they don't go according to what we're looking at, so a head and shoulder is a bear price pattern. It looks just like a man or woman's head and shoulder. And so my expectation is once it breaks the neckline, which is simply the line that's drawn through the entirety of the pattern. Once it breaks here, typically what these things do, they'll retest, and then if they're good, they're going to look like that. But you can see that this thing, went under the neckline, and it looked like it was just a trap under here, that if you chased all the prices under here, that now you're trapped and it looks like it's going to go the other way. So this is starting to, the main trend, the huge trend in the stock market has been higher for a decade now. And now you have a very friendly Federal Reserve, very difficult to fight the Fed. And, Chairman Powell spoke today. He couldn't have been more dovish. So we've seen, interest rates, the 10-year go to, almost 1.7 today. And he didn't blink. He said, I'm not doing anything. I'm keeping interest rates low as far as the eye can see. So we're faced in the United States with a economy that's going to grow 6% or more this year, 3% next year. And you have a Federal Reserve that chairman who's he's not even going to blink. I've never seen anything like it. I've never seen a Fed chairman in the face of a 6% growth economy be as dovish as this one is. And, we'll see how that works out. But for now, you can almost make the case that we have an inverted head and shoulders. And what I'm really looking at is the price action today. So today we went much lower. We opened, went lower, but we closed at the high part of the day. Now we are in this resistance level right here. So I would say it has to clear this price right over here, which is just a hair above where we are now. And then it looks like we'll go into some white space and take a look at, what it looks like there. But, you have a uber dovish chairman, and, we'll see what this looks like. But, whenever I see these key reversals, and what I mean by key reversal, is when the market closes and it closes closer to the high than it does the low, it indicates that the buyers were in control. So earlier in the day, the sellers were in control. This thing was going lower, but it just couldn't hold. And now you've got this pattern that, should have broken. And by virtue, so if something doesn't go down, it's going to go up, right? So I could sound, make all of these fun fundamental reasons why or this or that, but sometimes it's as simple as that. What doesn't go down has to go up. And, you know, you also see kind of the price bars under here, which I should have, when you made a key reversal here, you've got all of these bars where you made new lows and you closed on the high. And that, you know, is now indicating that you're probably going to make another push higher. So the market is a dynamic thing. I made a whole bunch of money on the fall here. I gave back something, you know, trying to, you know, stay with this pattern. But it looks like now, you know, things are going the other way. I'm looking also very carefully at a pattern in the S&P, which also looks like the ascending broadening price pattern did in the NASDAQ, but this thing never fell like the NASDAQ. So the NASDAQ was the front runner, but we are still tracing out this ascending broadening price pattern, which, you know, would probably bring prices north of 4,000, 4,200. So I would look very carefully up there because that really would be my objective. So we have a key reversal here also where you made a new high today. Whoops, took the wrong indicator. You made a new low and you close on the high. Now you're in this very tricky area where you're, you know, at a resistance level, but when you make a key reversal like this, you know, it points in the direction that this thing wants to go. And so this thing looks like it wants to go at least to the upper limits of this ascending broadening price pattern. Now, just because, you know, we have a broadening price pattern, it doesn't mean that, you know, this is, you know, automatically going to, you know, turn into a bearish thing. What I do is I put a structure around prices, and that I observe how prices are, you know, how they fluctuate within here, you know. And if I saw like a key reversal up there, you know, I would think that we would come back down here. So right now, the path of least resistance in these stocks is higher. And you have a chairman today who couldn't have been more clear about his intentions. He is not going to budge on interest rates. He's going to keep interest rates, you know, going as, you know, as low as they can for as long as they can. And so to my mind, this will create a bubble at some point. But, you know, the markets are all about timing. We can philosophize and think about certain things. Now, yesterday, I talked about this, you know, inside bar. Now, typically, these inside bars are catalysts. You know, they're, to my mind, it's just a coil. So when I see these inside bars, to me, it's just a storing of energy to release in the direction as indicated by the trend or the pattern. And right now, this is just releasing, you know, in, you know, this is hugging a very tight trend line. And it looks like the path of least resistance is higher. So this was a huge turnaround. You know, I've been looking at a lot of charts on the NASDAQ. I'm still having a hard time believing that, you know, all of these bearish charts that I've been looking at are just going to be, you know, automatically turned around. Now, one of my favorite charts or favorite trades, as I said to you guys yesterday, is that of Zoom. Let me just get a wider timeline here so we can see it. Let me just tighten it up a little bit. One more. Okay. So we had a bounce today. We had a key reversal today, but, you know, as I say, you know, I don't treat all reversals equally. I look at what happens in context with the trend or the pattern. And today, you know, we were going earlier in the morning. We were, you know, going down to 327 or so. And you can see by the end of the day, we closed higher. So this was Zoom. Went down to 322 and closed at the high part of its bar, constituting, some kind of reversal, which, makes sense. There is support in this area. But frankly, this is why, I don't just fire at any, reversal that I see. I have to look at it in context with what is going on. And to me, look, we could make another poke up here. I mean, things just take its time, before it gets going. But I do believe that this is, one of the most bearish charts we'll see. And I do think that it's just a matter of time. But it was kind of like that trade in BYND. I thought it was ready to go. It had one more push to the upside. So this is, to my mind, what I try when I open up a chart, I look and see if there's a trend or what I call a governing price pattern. And the price pattern could be in, a near-term juncture where you have a huge double top there, or even a far term where this made an all-time high. And at the high, it failed. It made this M top, which is a reversal. And by definition, with the word top in it, it indicates that prices are going to go lower. But then it's just a question of timing. Prices could just, continue to vacillate in this area before they go down. I mean, it's a wide area, but I still think that the path of least resistance is lower. So we have the double top. We also have a head and shoulders, which just looks like a man or woman's head and shoulder. And we crossed the neckline there some time ago. And you can see, when prices come out of these things, they, typically come out and then they may retest it. So you've kind of had a retest in Zoom. You failed right at that breakout area. And now you're hovering right under this breakout area. And to my mind, it looks like you failed here too. Two reversals. And so to my mind, we're just treading water in here. And so when I see these kind of things, I just sell into strength. So if we had any kind of rally, I would use that rally, look for an opportunity to sell into it. And frankly, I would be, I wouldn't be surprised if you see this tomorrow. So, Zoom has been on my radar. I put out an email over the weekend to get short Zoom at 338. And you can see that, we're just there right now. So let me just pull up, just to give you an idea of what my email looks like. If you don't, let me just change this because it has my email in it. And if you saw it, please don't bombard me with emails. So this is, what I had to say over the weekend. I said the tech wreck is probably not over, but I would need a break below 310. So I look for the market to confirm what I'm looking at. And today we went, I don't know what the low was, but it was well above 310. And we didn't go, so it didn't really confirm. So right there, it's on the QQQs. And then I said that the Japanese yen pairs appear poised for a paradigm shift. And I think they do, and we'll talk about that in a moment. I was looking at the dollar going sideways. I said then we're going to go lower in the US dollar. The major trend in the dollar is lower. And so you can see that there was a chart I did on gold. I said key reversal in gold around the lower end of an ascending broadening price pattern indicates temporary support. So I did expect a bounce off the reversal. So this is, I said all of this on Sunday. I put a buy stop in the pound yen. This is what I was looking at, the QQQs. I said put a sell stop. So I put orders under certain levels and I look for the market to confirm what I'm looking at. So I was looking at the ascending broadening, as I pointed out, the head and shoulders, but I needed the market to come under the weekly lows to confirm what I was looking at. And it did not do that. I think today's low was 315.68. So we didn't get to the 310. And so didn't confirm what I was looking at. So here was my trade recommendation over the weekend, sell short Zoom at 338. And today we're trading at 336, so no big deal. I said, in my analysis, Zoom is the poster child of why I think the NASDAQ's going lower, decelerating cash flows, discounted higher interest rates. And I think certainly for second tier stocks like Zoom and Peloton that have benefited so much by the pandemic and now they face different realities. So despite today's rally, I still don't see that. I mean, this chart is still intact, meaning that I still think that, we're going to go lower. And, the bellwether, that I'm looking at is also Tesla. Tesla made a really nice bounce today, went to 650, closed at 700. And so we have a key reversal today in Tesla. So it does look like prices are pointed higher. So I was pointing out, the last couple of days, let me just blow this up a little bit. This is just one of the weeks where the market's just been thrashing around. So I know we've been talking and you haven't really seen a whole lot of, progress or whatnot, but I just want to show you how I look at trades, how I look at setups. And so you kind of have this, these inside day bars where all of these ranges, this one snuck out a little bit to, of the low. And so now you kind of have this range bound affair, but then I defer to the price action within the range and say, look, we had this huge key reversal today, made a new low, close on the high. It appears that this thing is pointed higher. We also have what appears to be an inverted head and shoulders price pattern. And it all coincides with Tesla kind of bouncing off this long-term support trend line. So it looks like we're going to hold. So you can see we, bounced several times along the same line. It's just amazing how the markets retreat. It came back here right to the support trend line, and now it looks like you have an inverted head and shoulders, and it looks like we're going to clear the neckline. Now, to my mind, the neckline is around about 720. So, a break above 720 in Tesla looks like, you're going to go back up. So Tanya says, what about SQQQ? So SQQQ is the opposite or the inverse of the QQQ. So if the QQQs close bullish, then the SQQQs, which really have been in a long-term downtrend, finished really badly today. So let me just start with this, and then I'll perhaps blow this up, but maybe we can just see enough right here. So this is the SQQQs have been in this kind of opposite of an ascending, broadening thing. It's actually a broadening and then narrowing triangle. And you can see that, we're just in the middle, but this was very bad price action today. If you're, for the longs, where you made a new high and you close on the low. And so this thing looks like it's projecting down back to the lower end of this triangle. You also have a bit of a head and shoulders right here. And, I thought yesterday that maybe you had this thing and, this head and shoulder, just like the head and shoulders that we saw in the NASDAQ failed. Let me just, I thought that this may have given a false signal, but now it looks like it closed right under the neckline here. And so I think that is a bearish signal for SQQQ, which means that the QQQs are likely to go higher now. So you want to buy calls or you want to buy the QQQs and look for this lower end around 12.5 again. And, that, has been just the long-term behavior of these SQQQs where, these bounces don't last. But I think as we get to the narrow portion of this triangle. There may be another bite at the apple here for something perhaps much more meaningful. So for now, if you're long SQQQs, I would probably bail. This was very negative price action today. So James says, when do you think the bubble will pop? Anything out there? Well, you know, I've been looking at all of these things like SPACs and Bitcoin and NFTs and all the liquidity that's pouring into the market. And to me, that's what happens. The Fed creates these bubbles. And, you know, Greenspan in 2000, when we had a huge dot-com thing, he kept interest rates lower much longer than he should have, which then just fueled the housing bubble, which came along 7 or 8 years later. And then, in 2007, the Fed chairman Ben Bernanke said, there was a hedge fund that went out of business. A major brokerage or hedge fund went out of business in 2007 as a result of the subprime crisis. And Ben Bernanke said, in 2007, I don't see any problem in the subprime market. And then the subprime market almost collapsed the world economy a year later. So even the Fed chairmans, to my mind, I just look at the tea leaves in the market. The market is a discounting mechanism. The market is taking all of the information and showing you and pointing where it wants to go. And so that's what I like looking at these upside down things. So to me, this SQQQ now looks so bearish. And so if I have any ambivalence about the QQQs, I look at this and I go, the triple Qs now have to go higher because this looks so bearish. You have all of these key reversals, here, and then you have this, this kind of head and shoulders that was building. Now, for some reason, I don't know why I was fighting this thing, and I thought maybe, we would reach a low down here and, have a pop, which meant the QQQs would go lower. But, again, you have probably the most dovish Fed chairman we've had in history, and you can't fight the Fed. So the stock market will go higher. And we just have to look at, select instruments within the stock market. So for instance, I still feel like I'm going to stay short Zoom. Maybe there'll be price action where I'll get out and take a re-look at it. But, I'm looking at that chart in long term. I'm still bearish. I was looking at BYND yesterday with you guys, and, we had a bit of a reversal today. So again, sometimes it becomes very tough in the market to determine what is the guiding or determining pattern. And guess what? If you're ambivalent, you don't have to trade every, So we just have a series of price actions and patterns going on. This is BYND. So you have, this resistance area here, and then you have this support area here. Let me just put another color. And so it's a tug of war. And so what I try and do is look at how prices close relative to the high and low to point me in the direction. And, frankly, I mean, this thing is still, a downtrend. We had a minor reversal here where you made a low and you closed at the high. Sometimes these things can look benign, but they, can pop out of here. But I don't know. I'm looking at this chart and it still looks long-term very bearish to me. And so, yeah, we got a bounce because the NASDAQ got a bounce today. So I don't know. There's a ton of charts that are pointing me in, different directions. I've been short or I've been long these puts of GameStop. I was hoping to get a break out of this area. And today we had another reversal where, to me, this is not a question of if, but when this thing's going to implode. This stock makes no sense at all. And so you kind of have a double parabolic market where you have one parabola, where a market goes up just infinitesimal in a parabolic way. and then you went down to 40 and you went back up there. So you have two. So to me, it's a question of time, but I have till Friday. My break even on these things is about 230. We're trading a little under 209, and today was pretty favorable price action. We made a new high, close on the low. Now they look benign, but we had the same thing last Friday. And when I saw that reversal last Friday, that's when I bought my puts. I bought the 310 puts for about 70, which means I paid $7,000 per contract because it's based on 100 shares. And so I need this to go lower by Friday, but I'm break even or a little bit better than break even right now. And we had a reversal, and I would expect this thing to continue lower. But my options expire Friday, so we'll see how that goes. So somebody wants me to put this thing in the upper left corner. Okay. Or the right corner. Holly says, what are you looking at, the 1 minute or 15 minutes? So I'm always looking at the daily or the weekly or the monthly, Holly. My whole objective is to capture the big moves in the market. So I bought these puts when the market, GameStop was trading at about 260. It closed on the low at 260. Now we're at 209. So the thing has gone down $50 since I bought these puts. So I'm looking for the bigger moves in the market, and frankly, I'm hoping that this thing closes under 150 by Friday, puts on just some kind of huge move, because I think it could collapse just like here. It will. It's just a matter of time. I might miss it, and then I'll put on another set of puts next week if it doesn't fully collapse. But eventually this thing is coming back down to 10 or 20 bucks, because that's all it's worth. So these stocks get out of whack for a while, but eventually they have to represent the underlying fundamentals. So somebody asked about AMC, and I said put a sell stop under today's low to test it out. And so this is a great example. I love not getting filled in the market. So somebody asked, I think on Monday, what do I think about AMC? And I said, I still think it needs to kind of go up a little bit more and test, this area. But we came off yesterday, and this could have worked out to be the second peak. So the way I kind of do it is I put a sell stop there and let the market do all the work for me. So if the market was ready to go, it should have put me in. But you can see that the market opened a little higher. We've got a little inside bar here, and we might just, so now you kind of have these two inside day bars, both yes. And what I mean by an inside day bar is that literally these two sessions, these two daily sessions, sit or reside within the high and low of the prior session. So now I look at these bars as like a coil. Now you could uncoil and come a little bit higher, but again, I wouldn't want to chase this. Even if it gets going, you could be caught holding the bag, and then it does one of these things. So I'm going to be just patiently waiting, like I did for GameStop, and I'm going to wait for something that if it goes up and does something like this, or gives me some indication, I'm going to buy some puts, or just it's such a cheap stock, I'll probably just sell short the stock. The danger about selling short the stock is that you have kind of an infinite exposure. If this does another GameStop and goes up to 50 bucks, then you have a lot of liability. And so the way I handled it was I bought like deep in the money puts with GameStop. So that way I kind of put a cap on how much I would lose. And by, buying deep in the money puts, I knew I would have something left over if it didn't perform up to par. So to my mind, you could still put a sell stop in here, just let it reside. Eventually, if it catches you, it's probably going to be a good order. And, this thing is going to be under $5 at some point in the near, not too distant future, I would assume. Cello says, do you believe gold was still going and touch the 1650? So, you know, in I saw the reversal yesterday or this week on the weekly, you know, and I said there was likely some support here. So now, you know, I'm just going to, you know, observe this thing. You know, I had a stop on one of my positions, and frankly, I still have an outstanding position that is short in my personal account. I shorted one at 1841, one at 1797, and I still have the one. I covered one last week, and you know, I'm just going to take a look at it here. You know, we're in this kind of tight trading range here, and I want to see how we perform right here. So this is, I think, an area of some resistance. You know, I said if this thing got above 1650, 1750, I'd probably look at shorting it. But as I said, I would look for some price action. I wouldn't just short into it just, you know, on a whim. So this thing is still trading within this broad ascending broadening. And yes, I kind of still feel like will come, although, you know, the comments today were so, you know, so amazing for how dovish Powell was, that he's just going to keep interest rates low. And, you know, gold has been responding to the rates that have been going higher in the market. And if rates start coming lower, then, you know, gold will start lifting off. And so these reversals point in the market, you know, sometimes point in the direction the market wants to go. So they make a new low, close on the high, they point. But to my mind, there always has to be some kind of pattern. You know, I can't just see gold doing that, you know, driving through all of this price action. So what I like to see, just as the reason why I sold it was that we had a pattern. We had an ascending broadening price pattern. We had a double top here. We had all these inside bars. And yes, we have a reversal. But, you know, one reversal does not make a bull market. What I would like to do or see if you know, if this thing was going to turn, is to come around, consolidate this low, put on, you know, if I saw this where you had two lows here, two key reversals, and you built some space. So to my mind, again, you have to build away from, you know, this down thing. When things go down this much, they don't go up like that. You have to have some kind of backing and filling and building away so that you can turn in the other direction. And frankly, you know, in light of, you know, Powell's comments today, you know, this should have been up even, you know, even higher. He was so dovish. So we'll see. This is kind of a complicated area down here, but, you know, one low does not make for a bottom. So let me just put some more time up here. Yeah, so as I said yesterday, you know, it's like you have, you know, all of this cumulative price action, you know, sitting on, you know, one low. And so you know, I say to myself, can I see this? Can I just see the market taking off from where we are? And, you know, look, you know, stranger things have happened, but, you know, we do have these reversals here, but I don't think it's enough. This doesn't, to my mind, constitute a pattern that, you know, will just go through all of this. So the market has to go through all of this stuff. And so to my mind, you know, you're basically retreating to this breakout area of this huge descending triangle. Here, let me draw it exact. It's right around that low. So we've had this huge descending triangle. And now look, this could be a bear trap where, you know, if you chase these lows and now it starts coming out the other side, this could be a trap. It looks like that's happening in the dollar yen right now. So I am not discounting it. You know, you've kind of got this rounding action. You've got this, you know, kind of thing. And so I can't see it going through all of this stuff. But, you know, look, you know, when you break through these things, if you don't kind of go back down in the direction and you start, you know, hovering, then, and you come out the other side, then, you know, I start watching these inflection points. And I think we're at these inflection points in these yen trades where the dollar yen is kind of mirroring this gold trade. And like I said, I just want to see some more time here. You can see that we're starting to fail this week. I said yesterday that, you know, I'm still skeptical that the dollar yen is going to break out to the upside. So actually, let me put some more time here, because this is a currency that I have made all kinds of money on betting on the downside, also the upside. I mean, you know, I take both sides. I take what I call counter trend trades, but the trend in dollar yen has been lower for, you know, 5 years now. And I spoke a lot about this yesterday, but this is, you know, a chart that, or a market that to my mind offers a lot of opportunity. And I've read it just about perfectly for many years now and made just countless amounts of money. Because what I look again is for a dominant or global price pattern. So when you look at a market like this, it's like it gives you a headache. It's like you can't make, you know, heads or tails out of it. It's really been somewhat of a, you know, sideways market for a long time. But actually, if you look at it, you know, it's been a series of lower highs, you know, against a common low. So it's this huge triangle. And to my mind, I think you're going to break it on this side. And so that's what I'm looking for. But if we start, you know, kind of, you know, coming out of here, you know, then it will, you know, create what I, you know, call a paradigm shift, where it will shift, you know, what it's been doing for, you know, many decades, actually. If you look at a long-term chart of the dollar yen started about 350 to the yen. Now we're at 100. So we've got a, you know, 20-year downtrend in this thing. And I don't think we're just going to turn this around. So this is what I was kind of talking about with gold, where, you know, it looks like we kind of, you know, broke the lower end, although this didn't break as much as gold. I mean, gold kind of came through here, you know, and then, you know, might be doing that. So, you know, we kind of came here and then we went back up. So now this is why I'm looking at this area. And you can see, I want to see how we close. So that's why, you know, I wait for the close. And since this is a weekly chart, I won't know what the close is of this bar until Friday. And right now, this is a pretty benign bar. The range is very, very small. And so, you know, I'm going to look on Friday to see, you know, but to my mind, you know, I don't know. I have a problem because when something goes up this, you know, this hard, this thing, it doesn't just come down against that. And so I'm somewhat, again, ambivalent on this trade. You know, we started off with a double top. We have a head and shoulders. And this, you know, this to me was the governing price pattern for many, many years. So every time this thing went higher, I shorted into it. And now, you know, I don't know if this is another one of those opportunities. This one looks a little bit different. And so I just want to see how we behave here, because this is, you know, what I call an inflection point. You know, are we going to get, you know, a change in direction, or are we going to go back in the direction of the last 5 years? And so we're really at an inflection point. And frankly, the yen cross pairs are pointing that this thing is going to Now, maybe not the dollar yen. The dollar yen could just, hang, just stay even. And if the euro keeps increasing and the pound keeps increasing, then the euro. So this is the euro versus the Japanese yen. And the long-term trend has been lower. But we're starting to break out of these trend lines. And starting to shift the paradigm. So, we have a double bottom, inverted head and shoulders here. Now, here is the struggle, as a trader and looking at these. The market throws us, patterns all the time. And again, I'm trying to think of how to frame this. So my view and my context for this thing was that we were going lower. We had kind of a head and shoulders here, and we broke it, and we were in a long-term downtrend. But then if you see, opposite patterns, we have a double bottom and a key reversal. It offers, what I mean by key reversal, made a new low and closed on the high right at the pattern low. And so sometimes there are opportunities for what I call counter trend trades, where I will obviously buy this thing, but all the while knowing that the dominant trend is a downtrend. And so there are obviously always opportunities, even if we see, big moves, that there are going to be smaller moves within the bigger moves to take in the opposite direction, what I call counter trend moves. And so now I'm wondering if this double bottom, inverted head and shoulders, is kind of the same kind of fake out that this was, where eventually you ran in the gauntlet of the long-term trend and it turned lower. And the more this kind of hangs out here, the more I think that it's not going to turn out low, turn down lower, that we are starting to shift and change direction. So we cleared the neckline of this double bottom, inverted head and shoulders price pattern. And so this really constituted a breakout. Now, I was really open to the question as to whether we were going to get, kind of a fake out where you get above here, traps everybody and does one of these. But by virtue of how steadily, prices has not been, volatile, it's just been creeping higher and higher. And so I really like this price action. We are right in this area of huge resistance between 130 and 132. The next thing to clear would be 136. And then there's a lot of blue sky above here. And, I was wondering if, we were going to get in this area of this previous double top, and then this would be a trap and it would turn lower. But, the price action has been steady and consistent. And frankly, the path of least resistance is higher. And so I think these yen pairs are where the next real opportunity are. If we get a paradigm shift, it's going to be a huge opportunity. And so we're really just on the cusp. This is the monthly chart of the euro versus the yen. And again, this is where, I had some open conflicts just about where we're going to go from here. And sometimes when you don't know, you just let the market put on the price action and tell you. So you can see that we are just breaking out of this long-term monthly symmetrical triangle. But I've been reasonably skeptical that we were going to do this. And so I just I'm looking to see the price action here. But frankly, when you have this size key reversal, which started this whole thing off, so you can see right here at this double bottom low, we had this key reversal right here, and this pointed in the direction. And so now I'm looking at the potential obstructions in the way. And I feel like today I'm so, it's hard to sometimes explain everything that goes on in my mind when I look at these things. But how price action behaves in the face of obstruction, or, when it goes into a pattern, tells me, everything about how it's going to react. So if price does not, get rejected here, by virtue of it not going lower, it means that it's going to go higher. And so it's just going to be interesting to see how we, clear all of this, what has been, old resistance lines. But the market put on this double bottom all the way back in 2012. And so I don't know. Honestly, I'm still on the fence, and I'm looking for the market, because we have been in a long-term downtrend. A cadence of lower highs. And now it's just going to be a question of, do we start taking out? So this would be, this high right here. And you can see that we're just within spitting distance of that at 132 or so. So if we start taking out some of these highs, and we start, reversing this pattern of lower highs and start making higher highs, then this thing is going to turn around. And so I look at these very big patterns to then start establishing trades that, I'm comfortable holding for days, weeks, months, and, even years. So, I'm looking at this thing very hard, and the pound versus the Japanese yen. Also, in this bottoming phase, but, after a long-term downtrend. So you can see the major trend obviously has been lower for decades, and now we're a stone's throw from breaking this long-term downtrend. So the question is, these huge basing, is this just a huge bottom under here that's going to, levitate this thing? And frankly, even if it goes back into its long-term trend, it could, go up a long way and still be lower than these highs at 190. So there may be a lot of scraps left on the table, and this thing looks like it's poised to go higher, the path of least resistance. So I was looking for a long time at this double top, this interim double top that, has been dictating prices, but I think that pattern is no longer, operating in, and instead now you kind of have this inverted head and shoulders. And some time ago, you broke the neckline of that. And so I, would hope that we get some kind of setback to the neckline, another buying opportunity, and I would look to take that higher. So these yen trades, I think, are where the next real opportunity is going to be. So Algamontas, I don't know if I pronounced that right, wants to look at dollar versus Canadian. Where is it down here? So I am very bearish the dollar versus the Canadian. I think I said so at the beginning of the week. And, when you look at this monthly chart, and again, each one of these price bars represents 1 month in time. Now, this is very different than what most people are looking at, where they're looking at a 15-minute chart or an hour chart. But when you stand back now, you can see very clearly, what's going on here. And we're not too far away from going to the neckline. The neckline is simply a line drawn through the entire pattern, which confirms the pattern. And then, if we were to, I imagine that we'll flirt here, do a dance up here. But this neckline around 120, if we break it, there is a lot of white space for this to go back into. And so this has just been a huge downtrend. There were a lot of patterns on the weekly, the daily, that informed me that this thing was going to go lower very early on. And I think I was saying as early as Monday, when somebody asked that, this thing's just going to go lower. And you can see we're at the, lower end of this trend line here and ready to take that out. We kind of have this thing like the SQQQs. You have this reverse ascending broadening triangle. So this is about to break this thing, but that's just making it too complicated. It really, the whole thing was right here where I saw this descending wedge triangle. This is one of my favorite patterns, by the way. It's called a descending wedge triangle. And the dollar yen is in something like this. And so when I see these things, these triangles can be, bullish or bearish. So in the case of the dollar yen, it looks like we, went to the low side many times. And if we sneak out, it could be, a breakout to the upside. In this case, by closing under the low of this thing indicated that this thing was going to go lower. But this also coincided with a long-term double top. And now you have, the head and shoulders, which you broke some time ago. And now this is just a green light to, go much lower. The next mini resistance is 200 pips lower, 122, and then 120. And then if it breaks 120, it's just gonna open up. So I would look at any rallies in dollar Canadian, and it doesn't look like you're gonna get many to get short. James says, do you think UVXY will go back to 9? So UVXY is a volatility indicator, and it's just a fancy way of saying, and it's basically based on the S&P. And so it's again the inverse of the S&P. If the S&P were to go lower, then the UVXY will go higher. And right now, we're just breaking all kinds of lows here. This has been going down for ages because the S&P has been going up for ages. And, right now, today it made new lows, which indicates that the S&P is going to go higher. There's nothing to indicate, there's no pattern to indicate, anything here stopping. The only thing I would look for, at some point, is if it, comes down, to whatever level, and gives you one of these. But right now, there's so much momentum to the downside. And this Fed today just kind of made it pretty unambiguous. They are just going to stand behind and save investors, which to me, ultimately, will create some kind of bubble. But, that's for another day. So it looks like, UVXY could come all the way down here before it finds any support. And, you can see along the way, there was, some clear obstruction. So, yeah, if you're long, I wouldn't hold out for, much upside price action right now. So we'll see what kind of what happens here. Sometimes when you go to a low, you meet a low, and then the next day, if it, if it digs in and then makes a higher high, perhaps I'm having a hard time because I still look at all of these charts in the NASDAQ, like ARK. ARK is really a proxy for the tech sector. They own all of the tech shares like Palantir and Tesla and on and on. And again, I think this is a great teaching moment, if nothing else, because, I see these patterns and then, I make a bunch of dough on them. And if they stop, so to me, when I look at Palantir, and this is what the QQQs look like, that's why I have such a hard time thinking that, this is not going to, keep going lower. But, you can stick to your guns as much as you want. The market is the ultimate decider. So just like all of Tesla and the Qs, Palantir just or ARK, ARKK, it's run by this woman, Kathy Wood, who's got a very popular following. Stopped right along this, this upward support line. And we had a key reversal today. We had everything that indicates that this thing, is going to reverse and point higher now. And so the way I look at patterns is, so we had a double top, we had a head and shoulders. And when we saw this double top, it actually did what it said it was going to do. A top means that, this thing topped out at 160 and went all the way down to 100. So, these patterns, when they shape, they give you indications of a move. It makes its move, and then, perhaps it goes the other way. So some of these patterns are for longer term, and some of them are, for as long as they take to fulfill their objective. So you can see this drooping neckline, and it's drooping because the right shoulder is lower than the left. So you have this blue line that is kind of downward sloping, which the implication of that is that it should be very, very bearish. But if the market just keeps going this way, then the whole implication of this chart pattern now, is going to be overridden. And we call this a busted pattern, where, the market goes, it should retest. And then if it's good, that's what it should do. It should, go in the direction of the pattern. On the other hand, if it doesn't, that to me is in and of itself an indication of, a change in direction. And sometimes I'll just take a trade because it's not going the way it should be. So the market's not going to do what I want to do. It's going to go. So here you kind of have this reverse triangle operating here. And so, maybe it goes here and then fails. But the more this thing goes higher, the more it doesn't go consistent with this double top, then it's just, I just have a hard time seeing that, though. That's what it's telling me today. I'm not going to go out and buy it. And perhaps I should. Sometimes, you just have to be objective. And I still feel like this pattern is inhibiting my objectivity, that, we're right at this inflection point. And so it's going to be very interesting to see, tomorrow, do we fail or do we go higher? And that's the definition of an inflection point. And by virtue of what it does, then it will start, cementing in my mind what moves next I need to make in the market. I still have short bets in the market. I'm short a few stocks, and, today should have turned things around. And, let's see how, let's see how we go tomorrow on Tesla. Let's see if these breakouts, if you have a follow through. So you close on the high. Let's see now if you follow through. Ference wants to look at Starbucks. Yeah, I'm very bullish on Starbucks. It's got a great looking chart. And, it's a very unsexy, so when things are this volatile, these kind of stocks are, stocks that I like to hang out in. So you can see Starbucks is making a new all-time high. Let me go and take a weekly picture. It's making an all new time high. It's a breakout. So you can see it had this double bottom at 70, and we're making a new all-time high. And so these are the kind of stocks that, I would look to hang out in with all this volatility. Another one has been Lyft. I think I told you that I'm long-term very bullish on Lyft because of this, very bullish price pattern that I saw a long time ago. Then I saw a setup right here about 6 weeks ago where I got initially very long. And now you're just at a little resistance level, but I would expect new highs in Lyft. So I would look at any pullbacks, as opportunities in LYFT. And it doesn't feel like you're going to get a lot of pullbacks here. This thing is just, gradually just going higher. This just is channeling higher. So today was, another inside day bar with a range today, very narrow range bar was inside. And so basically, if I'm looking at going long something like this, I use the market to confirm what I'm looking at. And I would simply just put a buy stop above the high here and let the market put me in. And it's very likely if the market kind of goes higher with all the momentum behind me, it's likely to keep going higher. And the nice thing about inside day bars is that you can, establish a very narrow risk, for a very big reward. So I really like the long-term for LYFT. That's, something that I would, definitely hang out in and not have any worries about, volatility and even if the market came off. What are the things that I'm looking at? There were a bunch of stocks that I was very bearish on. I made a whole bunch of money on snow. And, now it's just a question, I don't think this down move is over. When I just kind of look at this thing, I just see this double top in the, in the middle of it. And because of this, I was shorting this stock, every day. I would just come in and just keep shorting it because that just looks like, a top. Now this is a, recent IPO, so it doesn't have a lot of history and we're trading right at, it's support level. So, it could still come up, here, but, to my mind, SNOW. So there's still a whole bunch of stocks. And again, so I don't say it's a stock market. I say it's a market of stocks. So I like some stocks higher, Lyft, Starbucks. There's many that, I like higher. And then there's some that I have just a problem seeing that they're, going to go higher. Dash was another IPO. And to my mind, that just looks like it's going to go much lower. Lemonade was another favorite that I was shorting. So all of these names, but, you could have some interim support here. When you see these key reversals like you have in gold, you could get a pop out of this. Actually, Lemonade could be. So this is also a recent IPO. And based on, this huge double top and even the triple top, I was heavily shorting Lemonade. And now we may have one of these things where this thing's going to pop back into its trend. So actually, this actually looks pretty good. I might just buy this tomorrow. So LMND. And so you have a key reversal, low, and another low. So it's kind of a funky bottom. But if you come here, this could be, kind of a launching pad. And so this is what I will do. I'll just look at, patterns, even though, so, this had this double top, it did its thing. It dropped from, 180 to 80. And now, that may be over. And now we may be looking at a different pattern that then sends it back the other way. So, and this is a new, new issue. So there's not a lot of history. So, this is what I do all the time, where I kind of look at a risk reward. And these reversals kind of give me the comfort that, they try to sell today, they close on the high. So what I would do is I put a buy stop there, put my sell stop here. That would be my risk. And I'd be looking for, a good move higher out of this, if this is forming a bottom down here. And so I know I'm kind of a little bit wishy-washy today. I'm a little all over the place just because the market has been, shifting gears. I've been heavily short. I've made a lot of money on the short side over the last, 3, 4, 5 weeks, shorting all of these stocks, buying puts. And now, the market is throwing you something where, you may have to shift gears. And I'm still trying to figure out, is this real or not? And tomorrow we should really get a confirmation if there's a good follow through, above today's highs. So today's high in the QQQs was 323.85. We're about 200, points away from that. And so, tomorrow should, be very informative. So Gareth wants to look at BHP. So as you can see, what I try and do is peel back and look at the longer time frames. Trying, the more history you can get, just like anything else, I think we forget that in today's day and age. The only thing new is the history you don't know. I love that quote. So when I look at this very, very long term, so even in the short term, I forgot, I think, was it Gareth who asked me? It really helped me because in the shorter term, I could see that it looked, somewhat bullish, but in, the longer term, you could see you had a huge key reversal here. And so it's kind of tough to tell. You're right in this huge resistance area. So it's just a question of, do you dig in here at some point? Do you kind of grab a foothold? And then, but I kind of feel like this is flagging and I don't know. I think it's just hit a big point of resistance. It may just be a snapback before it goes higher, but kind of hard to tell here. I mean, this does on balance look like, a bottom that's broken out. But I don't know. This also looks like a long-term downtrend, and it may have just hit a huge resistance level. So I'd be on the sidelines about that one. And then you also asked about, I think, Rio, RIO. Well, all your stocks look the same. They've hit resistance and sold off. So this is what I see. This is why I'm so bearish on the, the bunch of stocks have just hit this resistance. So there was a low here. It broke out. And now it's, who's to tell where it goes from here. So yeah. This could constitute a long-term breakout. I'd look for a consolidation here. This may be, in an area of consolidation. It's just the way this has come down from 92 to 78, doesn't look friendly. So I would look and see if it kind of holds a 75, it grabs a bite. Nothing really captures my imagination there. Jackie wants to look at Apple. And so it's going to be very interesting to see, Apple, Amazon, all of these bellwether stocks have kind of stalled out, but, maybe time for them to, kind of repercolate again. So, it's been adhering to this strong uptrend line. And I think, Apple is probably usually a safe bet, for the long term, that it's going to find a way to crawl higher. So there seems to be, this kind of longer term trend line in here that it's kind of holding on to. And I would watch that trend line, because if, we started kind of coming back here, I think that it would pierce through there. So again, here's a pattern. And then it's a question of how does the price dance around the pattern? So I think it's, maybe I'm not artfully explaining it, but what I look for is how the markets create these patterns and then defer to the market action to see how it dances within the pattern. So when I see a pattern like this, this is what I would expect. But if the market doesn't do that, if the market, just breaks out and then starts going back up in there, then to me that pattern is not valid. And just by virtue of breaking the pattern, it indicates that it's probably going to go much higher. But, this is still in a big, distribution zone, zone or zone of resistance. There's huge resistance in here. And so it's going to be very interesting to see how, we go in the next couple of days. We have I would say if, we start getting above that reversal right there, then it will likely start getting traction to the upside. So again, this market is not going down. So when we see this bearish price pattern, and we see it kind of break and then go down, this is what we should see. We shouldn't start seeing that it kind of gets support here. And now could be having another pattern going the other way. So the long-term trend in Apple is obviously higher. You're fighting this long-term trend line. And look, if we came and broke this, then I would say that you have a huge opening back to $80. You know, the difference between, you know, the top at 145 to the bottom is 100. So I would, you know, I would look for it to go there if we broke that trend line. But, you know, we haven't broken the trend line. So it's going to be very interesting to see how this works out. And if we start clearing these highs, then, you know, it's just got an area to dance in. But I don't know. I really want to see how the next day or two works out. And this is where, you know, the weekly bars become very important. You know, the dailies, and that's why, again, you can't learn anything on a 15-minute chart. You know, I'm going back into huge amounts of history to, you know, see what's going on here. And when you see what's going on here, it's kind of very apparent. All the way along here, you have these key reversals. Made a new low, close on the high. Made a new low, close on the high. Made a new low, close on the high. And after each one of these, it went to a new high. So the path of least resistance in this stock is higher. I mean, you had this kind of temporary pattern that you had a sell-off from. And like I said, I look at these patterns, I make my money, and then see what happens. And if it doesn't, you know, keep going, then, you know, that's it. Now you got to look at the long term kick in, and, you know, but, you know, there's just a lot of chop and churn in here. So, you know, I wouldn't look for, you know, kind of an easy trade in Apple. This wouldn't be kind of my first instinct to get it. But, you know, I just feel like there's a lot of support here. So the path of least resistance in Apple is higher. Ari says, is Amazon in the same trajectory as Apple? So Amazon's also hanging out, and it's also what it didn't do as much as what it does do. And so Amazon is kind of another one of those things where you look at a certain pattern on one chart. So again, what I try and do is I put a structure or boundary around prices. And here was a double top. Now, when we see these, the market should do what? That. But if the market starts doing that, then it kind of invalidates or busts that pattern. And so this is kind of the education that took me a long time to figure out. The market throws patterns at you all the time. And then you got to figure out, you know, how to play those patterns. And, you know, it's, I mean, here was a double top here. You could say, well, is this going down? So the market, but, you know, right there, that key reversal right in the middle of that pattern would have told me that. So there's all kinds of nuances that is hard for me to, you know, kind of elucidate in just a couple of sessions of how I see things, how I look at the interplay of how a market dances around certain price action. And it just all begins with putting a price structure around, you know, prices. You know, you've just obviously had a lot of, you know, back and forth, and now you're trying to figure out, well, where's the next trajectory? This guy here basically tells you this guy is like, he's a guard. He's a sentry at the gate. He's like, he's holding the fort on lower prices so that when prices come here, you know, he's going to rebuff it and, you know, and make sure that he holds down the fort. So, you know, there's all these kinds of nuances within these structures that I look at. So I think the path of least resistance in Amazon is clearly higher. You know, now on the other hand, you know, we break this neckline, you know, and we start showing that, you know, this is a huge, you know, kind of triangle, then, you know, it could open. So for right now, but this is exactly the kind of market that I don't look at, right? something that's been going sideways for 8 months, I'm not gonna, I'm not gonna tear my hair out, what's left of it, trying to, figure it out or whatever. I want moves. I want to move like the NASDAQ that went down 15%. I bought a bunch of puts, made my money. I see lift, it lifted off. So, I'm looking for moves in the market. They could be, smaller moves, bigger moves, major moves, whatever it is. It could be a 3-day move. It could be a 3-week move. It could be a 3-month move. But, I'm looking for, some kind of price movement that moves from one level to the other. So this is not something that I would be trading right now. So Tina says, how do you analyze your price target? Do you use Fibonacci's or whatnot? No, I just basically look at, the pattern and then try and figure out, what's a logical movement within the pattern. So when I look at dollar Canadian, this is a logical point where you might between 120 and 122 take off 25% of your position, wait for, a bounce and, that kind of thing. Dollar, for me, dollar yen was just such a clear way to, trade this thing. So, I think I've been through this and maybe I can find it. Let me try and find it. So a couple of years ago, let me just blow it up, because this is to me an anatomy of a trade that I look for like 1 or 2 times a year. Now you guys are trading every day and you go, well, it doesn't sound very exciting. Hang on, let me just blow this up. But this is really what I look for in my trading, where I can find, a pattern, kind of understand what I'm looking at, and then just sit in that pattern. So on April 23rd or whatever, when was it? This one right here. It shows that the trade was executed on April 25th, but I think the email went out on the 23rd, which was a Sunday. And the trade didn't get executed till like a Wednesday. So the sell stop was 111.61. And you can see my take profit was 105.17. It got hit. And on that one trade, I made over 300 grand. Now, there's also what are called swap fees. These are fees that you incur from the broker on top of your commissions. Now, it's obviously a big number. I had 51 contracts. But, if you compare this about, against going in and out of the market every single day, it's actually a lot cheaper than paying the 2 pip spread 10 times a day, certainly on 51 lots. And so, and I got out August 12th. So I got in April 25th, August 12th. So that was 3.5 months. 3.5 months I sat in one trade, and then I added to the trade, along the way, as it went in my favor. I saw different, ways to get in this thing, make, more dollars before I got out of it. And in total, I made, a nice profit. And that's what really I'm looking for. So today, this week, may seem a little wishy-washy. I'm all over the place just because the market, really just hasn't shown its hand. And, it's just been back and forth. But what I look to do is capture the big moves in the market. And so this is where I executed that trade. And I think I showed this to you yesterday, right here. And so why did I do that? So to me, the larger, when I look at this thing, and this is a weekly chart, right? Going back weeks. And at that time, the major lows were right here. I remember the October low. So this was in April. And I was saying to our members at that time, this thing is coming back right there. I said, it's going to come back to this low. I was looking at this low. And so it wasn't really arbitrary where I put my take profit at 105. It was above, this low was about 104.50. So I thought, well, it could come just a hair above there. So I put my take profit about 105.10 or 17 or whatever it was. And so I saw that double top right here along this, descending wedge line. So this was a descending triangle. And once I understood, it kind of had a couple of attempts here, and then each high was lower, I could see the kind of sawtooth pattern that was happening here. And so once you kind of get a feeling for, where you are in the chart. And so, the question of, how do you take profit, which it depends where you get in the trade. Now, I got in right at the top. I sent out an email and I said, put a sell stop right here at 111.61. Right under this narrow range bar. You could see that was the range for the week. It was about 50, 60 pips, which is still the narrowest range I think I've ever seen in this thing for a long time. I think you got down here some narrow, but not as narrow as that. And as I said, when I was looking at the Dow last night, sometimes these narrow ranges can be huge reversals and pivots. So the thought process to me is that this thing is bouncing. I think it's a bear market bounce. It's a dead cat bounce in a descending market. And now, by virtue of this narrow range bar, it tells me that this thing stalled. In that week, it just couldn't push any further. And so I snuck my sell stop right there. Now, the beauty of this was that I didn't get executed for 3 days. It was probably in the middle of the night while I was sleeping. So you can see Sunday, Monday, Tuesday, this thing goes higher. And if it kept going higher, then my sell stop's there. It doesn't get executed. No harm, no foul. But what happened, this thing turned tail, triggered my sell stop. Now I was put in the market and, I have a $500,000 trade. Now I added a lot, to my trades, after I got in, there was another key reversal here, another one here. And so I used those to just add to my trades. But, obviously each time I'm adding, now your take profit is less than where you're getting up there. So whenever I'm asked about the take profit, it depends where you are in the trade. Now, the other thing is, and this is not so, easier said than done when you look at this thing. But you can see there was a reversal here, which to me told me that, the market stopped going down. It was likely that we were going to get, in a troubling area like gold is right now, where gold, like gold, we're in a downward thing. You see this reversal and you see these kind of upward momentum bars, but you still think that the move's going to be lower. So I saw this thing, but my objective was here. I said, we've got to come back there. And it wasn't arbitrary because, I understand how these patterns look. I have a vision for what I do when I'm setting these trades up. And so it was 7 weeks that this thing made a low. I could have made a whole bunch of money there. And this thing went higher on me for 7 weeks. That's pretty hard to do. And then broke down. So, I hung out in this trade for 3.5 months. And we may just be on the cusp, of another opportunity. This one looks a little bit different. So I'm going to see how we kind of look at the end of the week. But, this to me is just a sawtooth where you have lower highs. Each high is lower than the last. And so this may be another one of those great opportunities. A little bit on the fence with this one. Right here, I had the benefit of a double top pattern. I also had an inside bar. So I want to see if we have a huge key reversal here, but usually just one. Even if it was a key, when a market goes up this strong, like this thing, it doesn't just come down. So I want to see how this thing hangs out, behaves, backs off, fills, and gives me, another look and build some space away from this uptrend line to see if it's going to go down. And if it just keeps consolidating here, you could have a paradigm shift, and I'll make a whole bunch of dough as this thing breaks out the other way. So I think I'm going to end it there. I'm going to, what really explains my 4-step trading methodology is my book that I'm just going to put here. I'm going to put a link to it. It's the Freedom Trader Playbook. I'm just going to stick the link in the chat box here. And it's a pay what you want. $5, $10, $20. And here's the deal. Whatever you pay, my commitment is that I will double that amount and send it to the American Childhood Cancer Organization. So that's what I did all of last year. Every dollar I took in from every one of my book sales, I doubled that amount and sent it into the American Childhood Cancer Organization. And I sent over $25,000, $22,000, somewhere in there. So this is, tells you everything about how I evaluate the setup, the key reversal bars, the inside bars, the trade execution plan. And so it's all in this book. I put a link in the chat box. It's a pay what you want, $5, $10, whatever you think the value. And, typically I say, karma is whatever value you expect to derive from it. And it's up to you. And the thing is, the more you pay, it costs me more money because I double that amount and give that to charity. So I think with that said, I think tomorrow is going to be, a very revealing day, one way or another. And a lot of these things that I'm on the fence with, the market, kind of gives you an insight as to where it wants to go. By closing on the high of the day, the Qs, kind of look like they want to go higher, but let's see. They have to clear today's high. So I think today's high was 123.85. If they get over that, then it's likely that this thing's going to go higher. All right, guys, thanks a ton. Is the book printed or is it an ebook? I believe it's an ebook. So Rob says, I got a stimulus check. What's the best option to play with? So that's a thing that just, boggles my mind. So the government, issued $1.9 trillion in debt, sends it back to, people. And then, I think it's estimated that 37% of it people will put it back in the stock market, start playing GameStop with it. So the government's just issuing money to the public to, go gambling with. And then the Federal Reserve, is just saying, go to town. And so I don't know, to my mind, we're building big trouble, but, that's for down the road. And it's just, to me, it's a great opportunity. But in the meantime, you just have to look at the pattern of the individual thing that you're looking at. So you can get mesmerized. There's so much action. There's so many things. Look at one setup, understand that setup, understand the risk reward, and make a trade, based on that. All right, guys, I'm going to love and leave you here. I will see you tomorrow, 4 p.m. Eastern time for a wrap up.